the outcome of the election doesn't matter, okay? Because the principal economic force of the last 4 decades has been, can I say the emergence, but certainly the rise of the Chinese economy. Today, it now rivals Europe as the second largest economic bloc after America. And it is pursuing an economic policy that John Maynard Keynes, with profound dread and with profound passion, tried desperately to persuade his fellow kind of great thinkers back during the Bretton Woods conference at the end of the Second World War not to do. John Maynard Keynes was wonderfully pro-trade. Trade enriches our world. He was wonderfully pro the labor mobility across frontiers. He was desperately in favor of the mobility of culture and a cross-sharing of what makes us different, unique, but of course under the skin all the same. But what he was fastidiously against was the mobility of capital. And we live in a world where China elected, and it essentially was encouraged to go this path because we're talking about China. China attained World Trade Organization status back in 2001 or so during the Clinton presidency. And only 2 or so years prior to that, you'd had the Asian tiger crisis when superstar fast-growing economies like Thailand crashed and their currencies devalued in the order of 85%. And it was a rush to the exits by foreign capital providers, which it didn't cause the calamity, but it very much made it happen, and perhaps it made it happen quicker.
Quick break here, guys. Today's episode is brought to you by Copernico Metals. Now, regular viewers of my channel will be familiar with the entrepreneur behind Copernico. His name is Ivan Bebek. Now, although a young man in this business, Ivan's already created tremendous value for his shareholders in the past, namely with Caden Resources, which he sold to Agnico Eagle, and Keegan Resources, which became a mine now owned by Galiano Gold. Now, Ivan has surrounded himself with expertise from BHP, Newmont, and Barrick on his board at Copernico Metals. Check out copernicometals.com. Now back to the interview.
China has opted to run a closed capital account. So it is it has a trade account, and it has been very, very successful with the economic policies. Clearly, everything is prioritized to the exporting, and exporting accounts for is one of the principal and increasingly at the margin today, the only growth mechanism they have. And that is aided and abetted by their fixed exchange rate. You know, it's a dirty float. It is not determined by market forces. The renminbi or the yuan, I dismissively refer to it as the red cabbage. But it is set by bureaucrats at a level which, at the economic level, the currency is undervalued, which is to say that their exports are cheap. And the trade surplus of China vis-a-vis the rest of the world is enormous. It's enormous in the context of historical data. It's actually at the wide, if you will. So if we look at many data points, we can look at the absolute highs and the absolute lows, and we refer to them as wides. And we can look at previous trading hegemons, if you will, the US in the first part of the 20th century. And we're at levels where it's very hard for that trade account to expand further without creating the ire and the contempt and the anger of neighboring countries. So if we come back to the election, Trump in his first term, and very much to the fore with his candidacy, is pursuing trade tariffs against the Chinese. Now, that very much is very, very poor economics, but it very much comes back to this very dominant export nation, which has run trade surpluses for 25 years. And economics is meant to be about mean reversion. Like when you get a trade surplus and you repeat it year after year, that a market seeking equilibrium, were it not for the malevolent force of the People's Bank of China, the central bank, scooping up the dollars received by the exporters, scooping them up. Because if you're trying to buy red cabbage in Beijing, they don't take dollars, they take renminbi. That's why I call it red cabbage. And so all of the dollars you receive, you swap it with the central bank for the local currency. And then the central bank uses the red cabbage, so to speak, to buy US treasuries and other very low financial risk securities. Now, when it does that, when it buys a US risk-free asset, it's selling its currency and it's buying the dollar. And this is the process for why you create this kind of straight line in perpetuity. But the straight line is the wrong level. So when I say to you the policies of the two centrist parties in America are the same, the Biden administration, they did not jettison the Trump tariffs. And they're not really poo-pooing the idea. Now, if a party wanted to make a difference, if this election was going to really change the markets on the day that we're all watching this interview, the party would be introducing, it would be seeking to close the US capital account. The US would turn around and we say, you know what, we've been watching you Chinese, you're really, really smart. You are winning in this export business, but you're kind of winning at our disadvantage, and you're winning because we can't buy your currency. You know, you've got a closed capital account. So think of it as flattery. We're just going to copy you. And so if you're the Chinese central bank and you want to buy 10-year US treasuries, we're going to put a tariff. We're going to put a withholding tax on that. And we're going to make it very hard for you to do that. Now, in the process, the Chinese currency, if we can say ceteris paribus, this preposterous Latin assumption of nothing else changes, and things changing would be politics by and large. But if the US was to have a closed capital account or to impair the mobility of international capital, the Chinese currency would appreciate. Chinese citizens would become richer vis-a-vis the rest of the world. And richer people kind of buy things. They buy like nice bags, makeup, houses, cars, and they tend to buy more products from overseas. And then the system would be allowed to achieve equilibrium. So no one is proposing that in the US. And that's why I would say to you that the system will perpetuate. And this is a system that, whilst it's principally aimed at the management of the exchange rate, but when you have a sovereign nation parking its capital into the US, it fundamentally changes the price of money, and it fundamentally creates a credit mechanism, which in the last 40 years has meant that all assets have traded higher, and we live in an environment of the overvaluation of everything.